All right, welcome everyone. This is Bob Maurer. It is Tuesday, the 3rd of September, around about 4 o'clock my time. I want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. We do have some revisions to most of the strategies, the four that we are looking at here. So I need you to pay attention a little bit here so you can understand what has been changed and a bit of the why. So let's get to it. Hopping into the portal, you'll see the most current PDF version right here, uploaded a bit ago. And that is for this week, the week of 9/1. Scrolling down, here are the four strategies. All bear strategies. We got 314. We've been in this one for a month and a half or so, since July 19. This is the bear spread in live cattle. 315 natty gas bear spread. 318 wheat. That's the soft red winter wheat, the Chicago variety wheat spread. And then 319 the bear spread in soy meal. All the gray areas are changes on the week. And for 314, you can see I tweaked the exit price, which tweaks the risk reward profile. So you see the gains, approximate gains have changed. Natty gas, same story. And then for 318, the bear spread in wheats, canceling entry level 2, the more conservative entry level, that is. And I've tweaked the exits, targets, and the stops, so that tweaked the gains and the potential loss here. And then for soy meal, I canceled the level 2, just like the wheat above, and made an adjustment to the risk reward profile there. So we'll take a look at what has changed. All right, so let's hop on over to it. And we'll take them one by one. All right, live cattle. So let me clean up the chart first, then we'll go over the risk reward. So what I'm doing here is changing the target. So I've walked this forward. And for those who are still on board, I don't mean to sound like a broken record, but the original stop level was negative 87. So if you stuck to that, you were out pretty quickly. The market rallied really strong right out of the gate. Then I was doing the analysis, as you know, and the strategy still had a high probability of breaking, which it ended up doing. So those who followed along that line of thought canceled their stop and could still be in here. So that's why I'm continuing with this one. So if you're in that latter camp there, the thing I need to do now, though, as I walk this forward, is we're getting about halfway through this seasonal window. I looked at it as if we got in just today. How do the probabilities look? And if they look decent, do we need to either tweak the targets to have a more reasonable expectation to go ahead and lock in some profits, or could we keep them where they were? And what could we do with the stop? Well, for the stop, I think we need to leave where it's at. But as for the targets, walking it forward, we have to get a little bit more conservative. So the first target had been down here at negative 272. We're going to raise it all the way up to this negative 180. Just based on how this seasonal looks right now with the data starting September 3rd, that original target does not look obtainable. And then for the target 2, that's coming up to negative 205. So we're raising that to negative 205 from negative 337. So these are big jumps, but unfortunately it is what it is. And we have to keep the potential gains within reach relative to my interpretation of the data. All right. So that is how it looks now. So as of today, we revised the old target 1 up to negative 180, the old target 2 up to negative 205. So get on your platforms, call your brokers, call your trade desk, whatever method you choose to use to get your orders in, and go ahead and get those modified Trader's prerogative. You can always do what you want. I say that all the time. I respect everybody's personal opinions on the marketplace, and you can do as you wish, but that's my recommendation, is to tighten up those two targets. The risk reward gets changed, so now obviously the potential gains have decreased, and for both the regular entry type traders and for the more aggressive average in type traders. All right, so that is the new revised strategy number 314. Tightened up the targets, kept the stop where it was, changes the risk reward profile a bit there, and you should have all the levels. Market, as you said, or as I said, I should say, came out of this triangle, rallied, found no new buying, broke hard for a number of weeks here. Now it seems to be consolidating. This white line that's grown here is the 200-day moving average. Around about right here when it started, we finally got 200 days worth of data, so we could start pumping out, so the software could start pumping out a number. And now that continues to grow along the bottom there. I think it's what kind of held up, technically speaking, the market on last Thursday, and got a bit of a bounce going on right now. So bit of a long tail today. Hopefully what happens in the next couple of days is what happened when we had this longer tail here on the 28th, and it just falls on back down. We're only looking to reach that negative 180 to negative 205. Okay, so that is that. This little sweet spot here stays. So based on my interpretation of the data between 9.6 and 9.10, that's a 4 data point out of the last 15 years window, and it's 4 bars, 4 days. And I believe it was 4 times out of the last 15 years where the market had done its best into that little window there. So coming up into next week, basically, long story short, I would expect to see if we can get down to this area here. Might happen sooner, but at least it's within the ballpark of our two targets there, which kind of aligns well. All right. Strategy number 314, bear spread in cattle. We'll see what happens over the next few days. Next one is Natty Gas, beer spread number 315. So I'd revised this once on the 9th of August. Okay, and now I'm revising it again on the 3rd of September. And all I'm looking to do is similar to the live cattle. I'm going to keep the stop where it is, give us ample room to stay on board. The market does have the tendency to move lower still, but to closer targets. So the old target one was negative 312. It is now going to be negative 292. We're raising that up about 20 points. And then the old target 2 was negative 323. It is now going to be 304. So we're raising both targets, just like in the cattle. So the targets are being revised. We'll get rid of the old targets. And that is the new structure of this strategy. So this is just based on my read of this as if we were to get in today. All right, so tendency and the probabilities are still to the downside, although to tighter targets. The market basically had a decent rally, got us in a few weeks ago, broke pretty hard afterwards, so no follow through, and then now it's just kind of building up a bit of a value zone, call it anywhere from negative 295 to about negative 282. So roughly about a 13-point range or $130 values, that is, in this area. And we just need this thing to dance a little bit lower come tomorrow or by the end of the week. Maybe even power down to negative 304 to get that revised target to give us a little bit more out of it. So when you change the target, you change the risk reward. So I've changed that on the sheet, and then also right here you can see the potential gains have been tightened up quite a bit. All right. So that is strategy number 315. It's been revised as of today, tightening up the targets. This is based on my analysis of walking it forward as if we were to get in this thing today to see what we can get to on the downside out of this thing. All right. So get on your platforms, call your brokers, call your trade desks, modify those resting orders, those GTC orders. Okay, so that's strategy number 250, number 315, the bear spread in natty gas. All right. Then we got wheat. Strategy number 318. A few things here. Okay, similar to the past two. All right, this one had a target 3. I'm going to cancel that. Target 3 is gone. And then walking it forward with only just a few days left in this one. It ends on the 8th. My analysis suggests that those original targets aren't as likely as they used to be. So target 1 is now going to be raised up a couple ticks to negative 12 half from negative 13. And target 2 is going to go from, target 2 is now going to stay at negative 13 half. So that one's fine. That one's just going to stay right where it's at. All right, so that is all good. Let me move this over here. Okay. Then on the risk side of the portfolio, I think it's okay if we drop the stop from negative 5 down to negative 8. All right, so we're going from negative 5 down to negative 8. So we're tightening up the targets, but we're also tightening up the stop as of today. And then I'm suggesting that we cancel entry level 2. So with only a few days, trading days left in this one, I can't come up with a really good reason to get shorter if the market pops for any crazy reason. We'll just have to take the hit with the stop loss, but I don't want to add to it. So cancel entry level 2. All right, so a lot of changes there. Canceling entry level 2, new stop is negative 8. That's been lowered. Revised target 1 up to negative 12 half. Target 2 is going to stay the same. And then you can see that it's changed the risk reward potential gains there. All right. And really, it's just been choppy. So the expectation will be over the next few trading days, 1, 2, 3, 4, 5. It's got 5 trading days left that this thing breaks into the negative 12 half to negative 13 half. Now, negative 13 half will be asking it to make a new low. Negative 12 half will be asking it to just touch these recent little bottoms right there. So we'll see how it plays out. All right. So that is strategy number 318. Those revisions, drop a stop, raise the target 1, kept the target 2 where it's at. We'll see how it all plays out. And then lastly, we've got soy meal, strategy number 319. And again, a revision here. So the stop had been, okay, first of all, entry level 2, I'm going to suggest we cancel that. Okay, so the more conservative type of players who are waiting for it to get up there, this one's not going to work out for you. We're going to cancel that. That's gone. And then I'm suggesting at this point that we drop the stop. The stop had been at positive 27. I want to go all the way down to negative 8, which was the entry level 1. All right. So that is the change. Canceling entry level 2 and dropping the stop, tightening it up to break even for the entry level 1 traders, the traders who got in there. All right. So here, I'll put this and revised stop level, entry level 1. Okay. And you can see the market has been very kind. It rallied through the level 1 and then just failed to continue to move higher and broke pretty good. Today it touched our first target. I had a resting order there, so I know that you weren't necessarily filled if you had it there. So I'm going to keep walking this or following along with this trade, this strategy, until I see a fill or we do something different. So it did touch target 1. Hopefully some of you got filled there if you had your resting orders in there. Target 2 is negative 41. I doubt this target 3 is going to come into play. I'm not going to cancel it. Who knows if it's just going to break on down, and those who want to take the additional risk to see if it can get down there, so be it. But I think obviously negative 35 clearly looks possible, and then maybe -41 or so by the end of the week. We still got a couple weeks left in this one, so I guess no big hurry here. We'll see how that plays out. Okay, so tighten the stop and canceled entry level 2. Those are the changes to this one as of today. And we'll see what happens come tomorrow. No other changes. Currently, the entry level 1 traders, the more aggressive averaging traders, should be sitting with some level of unrealized gain. All right, so I know I went through a lot there, number of modifications, but it's just the way it is when you start out with a strategy a month and a half ago or so. You use that data into that period, and it suggests the targets relative to the data going into that period, and it also gives us an idea of where to hopefully have a stop in a safe place and still have a nice risk reward profile. But as the trade goes on and the seasonal window evolves, the data changes, and we just need to be able to adapt. Sometimes you can actually stretch the gains, and sometimes the data suggests to tighten up. So this is one of those where, for the most part, it suggested to me that it was time to tighten up. So those targets are tighter. Fortunately, we were able to at least drop the stop on one of those strategies to kind of reduce the risk along with reducing the gain. But the other ones, we still need to give it a little bit of room. Okay, so I think that should bring everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I am grinding my way through the analysis for some new strategies, and I will publish those as soon as I'm confident that they should be published, and we'll take it from there. All right, again, I'm going to leave it there, and thanks so much for watching.